I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks as always.
Tim, it doesn't seem like the U.S. is going to ease up on tariffs. We have President Trump today saying that talks are going well with Europe to bring in zero tariffs, except for the automotive sector, which is Europe's biggest concern. And then we have Leitenzer saying that NAFTA negotiations are going well, and perhaps they'll have a deal there as well. Is that good news for the markets, or do these tariff wars have their own life?
I think it all has its own life, and it's a process that is literally taking forever and ever and ever to unfold. You know, I don't know where. I guess we can start with. Let's do it backwards. Let's start with gold and oil and commodities and save equities for last. You know, I had been optimistic about metals and gold in particular, hoping that the 9-year cycle low had still lied ahead and tried to give gold the benefit of the doubt, but I raised the question that, or the possibility as it started to set up, that, it was looking increasingly as if the low had occurred in 2015, and I think I clearly said that was the most bearish scenario for gold. And I think we've also said, as time has progressed, that it was looking increasingly as if that's what has occurred, and I want to say, the last few times we talked about gold, maybe that that was pretty much the thinking. At this point, we have violated, since we talked last, I know we have violated the December 2017 low, and that was an annual degree low. So, based on that violation, we should have confirmation in a normal world, and I preface that because, we're seeing, things are taking longer, things are extending, things there's an element of abnormalcy in the markets now, but in a normal world, a violation of a previous low of that degree is an indication of the 9-year cycle top. So I'm not trying to speak out of both sides of my mouth. I'm just saying, the stance has to be that yes, the 2015 low was a 9-year cycle low, that we've seen the 9-year cycle top, and that, metals are going lower. Now, obviously, nothing goes in a straight line. There will be counter trend rallies, as we've seen all along, and, we're at a good spot for one now, but, I think any advance, is counter trend in metals, and if they go lower. Within the context of that, I think crude oil is, we saw another push up in crude oil. It looked like we had that higher degree cycle top, in place, but, back in May, but we had that one more push up. And now we're in the confirmation stage to confirm whether or not that was, the final advance into, the annual and, more importantly, the 3-year cycle top there. I know that the 3-year cycle top is due. There's no question about that. Looking at it statistically, the ebb and flow of that cycle, the top's due. And, it's been taking its time like everything else has forming. But I think that, like I said, we should be there. We need confirmation of that. So that will then set crude oil up to continue down or to go down with metals into the 3-year cycle low within the general commodity complex. And then within the context of that, we talked as, I think one of the first interviews we did this year we talked about the dollar and the strength of the dollar, and I said that, one of the surprises this year would be the longer-term 4-year cycle low in the dollar, and I think that is still firmly in place. We've had some sideways action the last few weeks as we had an intermediate degree low due, and we've been backing and filling and making that low, and the expectation is that the higher prices for the dollar ultimately lie ahead in conjunction with those higher degree lows that we saw earlier this year.
We'll have more with Tim Cyclesman Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, I know President Trump has said he wants to keep gasoline prices down, but because of tariffs and the higher price for steel, pipeline construction has ground to a halt, and without pipelines, you can't get oil to refineries, and that will drive up the price of gasoline. Is this an unintended result of tariffs? And do tariffs tend to have unintended consequences?
I would say that they definitely tend to have unintended consequences. Looking at, I don't look at the fundamentals. I look at at the charts and the cycles and the statistics. And, as crude oil peaks, we should see the corresponding peak in gasoline. And, an interesting concept, kind of like the Dow theory, you have non-confirmations between, similar sectors, if you will. And whereas crude oil and gasoline both peaked back in May, only crude oil made the additional push back up to a new high. So we have this little non-confirmation, if you will, between gasoline and crude oil. Now, I haven't done any extensive study. I do know that tends to happen at some of the major tops or I say major, more dominant tops in the energy sector. So I think that the little non-confirmation we're seeing here is an indication of that higher degree 3-year cycle top in the energy complex. So, will there be unintended consequences? Of course, there's unintended consequences to anything you do. But, overall, I think the technicals suggest that we go lower in the energy complex. We're just, trying to get this, confirmation of the 3-year cycle top in crude oil itself.
Do you have any price range in mind for crude?
No, I think we retest the 2016, low to some degree. I don't have any projections on it at this point. I want to get the top in place first, and then, once I get that, then, I can look at some projections. But I do think, obviously, and this is just a broad general statement, but it's the 3-year cycle advance out of the 2016 low. So within the context of that advance, it will be a retest of that low. I don't know how deep that retest will go. On the one hand, because this 3-year cycle is so right translated, it will be a retest of that low, but I don't necessarily think at this point that, I don't have any indication that it's going to be a violation of the low.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's your outlook on the U.S. dollar index, and how is that going to affect precious metals?
Well, they're set up to move in opposite directions. Like I said, the general setup with metals is to move lower, and the general setup, because of the higher degree 4-year cycle low in the dollar, is to move higher. So overall, higher dollar, lower metals, and lower commodities. The cycle in commodities has just been extended a little bit. It's been like everything else. It is not wanting to give way. It's held on for dear life, but the top is still due. So, as the dollar rallies, we should see the top in the general commodity complex eventually take hold and bite here. It's trying.
What are other currencies around the world going to do? Are they in a foot race with the U.S. dollar, and is anybody deliberately driving down the value of their currency, or is it just the fact that in what people suspect will be troubled times, they just go to the U.S. dollar?
I think it's just from my seat, it's just the dollar. It's just the cycles within the dollar. And, if you look at the euro, for example, I don't look at it every day, but I do track the euro. And obviously, when the dollar makes a 4-year cycle top, then the euro's making a 4-year cycle bottom, and vice versa. And the euro has been weak. So it's just an inverse relationship between many of the currencies. And that's the way I look at them. It's just the individual cycles. I don't look at the fundamentals and what's driving the cycle.
Tim, with the U.S. dollar going up, is there any worry that countries that owe a lot of U.S. dollars might default on their loans?
Of course, there's always that worry, I think.
How much of a hit would that be to the U.S. markets?
I have no idea. I have no way to quantify or measure that. I'm not sure. It would not be I don't know. I don't know the answer to that.
Going back to oil, is there a big concern with the U.S. and Iran talking tough, or are things like that just factors that happen all the time and you don't look at?
I don't look at. The cycle is going to take care of itself. It's kind of funny. Once the structure is in place and it bites, and I want to talk about that with equities as well, but once the structure is finally in place and bites, then, the cycle takes hold and does what it's supposed to do. And an example of that, way back, like I remember before the Gulf War, going into the Gulf War, that there was a major low. We were going into a major low. I'm talking about back in 91. We were going into a major low in crude oil, and then all of a sudden, the trouble erupts. I remember another example of that was during the Chernobyl accident way back in the 80s. The markets responded to that, and as we moved into some lows, some of the commodities popped in conjunction with that. So, there's always that fundamental something that gets tagged for driving for driving price. But once it's like, what comes first, the chicken or the egg? Did the news make the cycle come, or did the cycle, did the news, it's just, I don't know how to explain that. It's still like a phenomenon. But the point being is that once the structure is in place, then, Mother Nature takes care of itself, and the cycle unfolds accordingly.
So getting back to tariffs, all this stuff happening at once, we now are hearing from the White House that they're working on a deal for zero tariffs with Europe, except for the automotive sector, which they've been working on since the Obama era. And also from Leitner, he's saying that the NAFTA negotiations are going really well and they could have a deal soon. Again, is that an influencer on the markets, or people just looking at the real numbers?
Of course, it's an influence on the markets. I think it's noise, but it's an influence on the market. And amidst that noise, the structural setup is going to take, eventually going to take hold. Let me give you an example. There's cycles bedded within cycles. And to look at it another way, even the Dow theorist, they wrote way back in the day that, that there's waves within waves, and they equated it to, on the one hand, you had, the tide, and then within the tide you had the waves, and then within the waves you had little eddy currents and so forth. And so you got cycles within cycles, or movements within movements is the point. Long-term movements, intermediate-term movements, and shorter-term movements. Well, it's the same thing with cycles. It's just which eyes do you look through it at? And so with equities, we know that we've been in this ginormous bubble. Everybody knows that by every measure. And we finally had the top in January and the decline. It was brief in terms of time, but rather steep in terms of price. But it carried us down into, an annual degree, if you will, cycle low in February, and most every index bottomed in February. But then within that low, or the advance out of that low, we've had an intermediate term advance. And within that intermediate term advance, we've had numerous intermediate term buy and sell signals. And then within that, we've had numerous short term buy and sell signals. But yet the structure overall on most of these indexes and averages, such as, the industrials and key indexes and averages, industrials, the Dow Jones World, the structure is still in place. Now, some have made a new high, and that's fine, because, again, you have non-confirmations and that sort of things at top. So I'm not worried about that. But within the, focusing on the Dow Jones Industrial Average, the NYSE, we have had this tug of war, if you will. It's an internal tug of war for, have we topped, have we not? Have we topped, have we not? And it's been a push-pull. One side's won, then the other. The bull is won, then the bear is won, then the bull's won, and the bear's won. And so you have this internal conflict, if you will, the struggle going on within the market. And I'm looking at a chart now, which is why we've been sideways for, 6 months. It's gone nowhere. So what I'm saying is that I think that all this tariff stuff, yes, it's important. I'm not minimizing it. And absolutely it impacts the market. But within the grand context of things, it's noise. And quietly in the background, the technical setup is trying to take hold. Does it take hold here? Or is the can kicked down the road again? I don't know yet, and neither does the market, because the structure is not clear. That is the battle, the internal battle that is going on within this market. If it does bite, then I think we've had some higher degree cycle tops, and we're going to see some overall general weakness in equities. If it doesn't, then I don't think it's off to the races with a new bull market type thing. I think that the process is still underway. Because, this entire advance, it has not been corrected. What we saw into February did not correct the advance. So it's going to be a continuation of the process, if it is mended here. And it may very well be. But, like I said, it will be within the context of a continuation of the process.
Tim, for our new listeners, perhaps just outline what Cycles News and Views does and how they can get a hold of you.
Yes, sir. I'm at cyclesman.com, and what I do is it's a quantitative analysis using cycles and Dow theory. The cycles bring a quantitative aspect, if you will, to the Dow theory. The Dow theory is kind of a backdrop, and then we use the cycles and the structure and statistics as a guide as to what should happen. And like I said, one of the examples is, the expectation with gold. It wasn't the message that people wanted to hear, but it's been correct, with the overall weakness in gold and the dollar. Equities has been the most frustrating thing I've ever seen, because, they've continued to levitate. It's like a dying snake. It doesn't want to give up. It'll give a little and then get a little. But, anyway, getting off subject, but it is a quantitative analysis of the market.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests like Tim can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.